Thanks, Paul, and good afternoon, everybody. Today I'm going to focus on the Kathleen Valley Lithium project, where some recent studies have really highlighted the potential of the project to have a highly profitable, long-life mining and processing operation. I'll also touch briefly on the Mora project that Paul referred to, where our early exploration results have been outstanding. The standard disclaimer, I won't dwell on it, but this presentation is available on our website, and if you do want to read this page, then I encourage you to do it there. Liontown's activities are focused in Western Australia, and as someone mentioned previously, and given the current circumstances, it's a good place to be. At Kathleen Valley, we have world-class scale and economics. We have a very large resource which will support a 40-year mine life. Relative to our peers in the lithium space, we have a high-grade deposit which will help us control costs. And we're now currently investigating multiple opportunities to improve the financial metrics of the project as part of a DFS, which we should have completed by this time next year. At Mora, we're in a very exciting emerging mineral province. It's really only came to light in March this year. Our early exploration results have been fantastic, and we're looking forward to getting on the ground there and doing the maiden drilling program, hopefully next month when the crops come off. We have a second lithium project at Baldania in southern Western Australia. We've defined a resource down there of 15 million tonnes. We've recently put a mining lease application over the resource. I'm not going to say anything else about Baldania, but we do continue to advance the project, albeit in the background. All of our projects are wholly owned. They're all located close to modern established infrastructure. We're in one of the best mining jurisdictions in the world. We have a very highly skilled, well-credentialed management team, and importantly, we're now well-funded. We were well-funded before, but we've done a recent capital raising, so we have around $17 million available to us to spend. Moving on to Kathleen Valley. By any number of measures, Kathleen Valley is a Tier 1 hard rock lithium resource. By size, it's top 5 in Australia and top 10 in the world. Another measure of the global significance of Kathleen Valley is that together with our Baldania project, and because we own 100% of our lithium projects, Liontown has the 4th largest spodumene-related hard rock lithium resource base in the world, which I think is quite an achievement. In October, in fact October the 9th, we released an updated PFS. This builds on a study that we released back in December last year. We had to update the PFS because we doubled the resource in the intervening period. So the latest PFS established a reserve of 71 million tonnes, and based on a mining rate of 2 million tonnes per annum, we're looking to produce an average of 350,000 tonnes of spodumene concentrate a year and 430 tonnes of tantalum concentrate a year. And we'll be looking to do that for a mine life of around 40 years. And over that mine life, we're looking to produce a total free cash flow of $4.8 billion, so not an insignificant amount. The NPV is a respectable $1.12 billion with an IRR of 37%. One of the main outcomes of the latest PFS is we've got the OPEX per tonne of spodumene concentrate for the first 10 years of the mine life down to $345 a tonne. This represents an improvement of $140 a tonne compared with the previous PFS that we published in December last year. And we've been able to do this by reconfiguring and redesigning things to ensure that we mine higher grade material from the very beginning. So the previous PFS, the average mine grade for the first 10 years was 1 to 1.1% lithium. In this PFS, the grade has now increased to 1.5 to 1.6% lithium, so quite a significant improvement. We've based our study on a spodumene price of $739 a tonne, which has been provided by independent commodity experts Roskill. The capex of $325 million includes a significant portion for mine pre-production and also for contingency. The PFS was based on a resource that we put out in May this year. The resource is 156 million tonnes at 1.4% lithium and 130 parts per million tantalum. As I said before, this represents a more than doubling of the previous resource that the December 2019 PFS was based on. You can see there the resource is largely measured and indicated. The resource has translated at this stage into a reserve of 71 million tonnes at the same grade. We expect this reserve to improve with additional drilling. And you can also see from that slide that Kathleen Valley will be predominantly an underground mining operation. So the plan is there to start underground development and open pit mining at the same time. Open pit mining will go for about 3 years, at which point we'll turn the open pit off and become solely an underground mining operation. Open pit mining is then scheduled to recommence in year 25 and beyond. I get asked a lot of questions about underground mining for lithium. We don't see any issues there. It's just another commodity. The ground conditions are very good. It's conventional underground mining techniques, and there's a lot of underground mining expertise in Western Australia. As part of the DFS, which we're working on at the moment, which will be completed this time next year, we're looking at a number of opportunities to improve the financial metrics. Some of this stuff is pretty simple, things like expanding and converting resources through additional drilling. We're also looking at increasing the throughput. So the PFS we just put out assumed a production rate of 2 million tonnes per annum. The DFS will also look at the doubling this rate to 4 million tonnes per annum and to see whether this makes sense. A couple of other things, a couple of the other opportunities which I'll expand on with additional slides is that we think we have the potential to produce a premium concentrate at a higher grade than 6%. And at the same time we did the PFS, we also did a scoping study into the potential of downstream processing on site at Kathleen Valley. And you'll see from the slides I show in a little while that the economics of downstream processing is compelling. So why do we think we can produce a premium concentrate? Well, in contrast to our peers, we've decided to use whole-of-ore flotation to produce a spodumene concentrate. And we've done this for a number of reasons. One, we believe it's simpler. Two, test work shows that we can consistently produce a higher grade concentrate compared with the conventional DMS flotation processing route. And the graph or the chart in the bottom left-hand corner there just demonstrates this point. So if we look at a feed grade of 1%, DMS flotation processing route struggles to produce a 6% concentrate. And you actually see this with these existing operations. Those existing operations where they have a grade of about 1% really struggle to make 6% concentrates. Using whole-of-ore flotation, we can easily make a 6% con. And this relationship just improves as the grade goes up. So by the time we treat a feed grade of 1.7%, we can actually, through whole-of-ore flotation, be producing a plus 7% concentrate. Another advantage of whole-of-ore flotation is that it gives us the capacity to treat the entire ore stream for tantalum recovery. In a DMS flotation circuit, the DMS cannot be treated for tantalum, so you miss out on half the ore. Through a whole-of-ore flotation, we can treat all of the ore and recover tantalum. We recover tantalum through a magnetic and a gravity circuit ahead of flotation. This has the added advantage that it actually pulls out a lot of the iron ahead of flotation that's introduced through either dilution from the gabbroic host rock or through the milling circuit. There's actually not a lot of iron in the pegmatite that hosts the lithium, but iron does come in through gabbroic host rocks, and you can imagine in a milling circuit where you've got a lot of iron going around and around, balls, etc., it comes in through there. So putting magnetic separation ahead of flotation pulls a lot of this iron out, which means that the flotation treats a much cleaner product. So using this technique, we're confident that we can produce a higher grade concentrate with lower deleterious elements, such as iron, which will hopefully attract a premium price when it comes to processing. Okay, downstream processing, as I said, as part or in parallel with the PFS, we did a scoping study, level study on what would it make sense to do, consider downstream processing on site at Kathleen Valley. So we looked at producing two products, lithium sulphate, which is the LSM there, or lithium hydroxide. And I'll only talk about lithium hydroxide today just because I suppose it's easier for me to do that. But based on the same reserve and on the same mining rate, the study showed that if we reduce a lithium hydroxide on site, the NPV increases to $4.8 billion from 1.1. The internal rate of return increases to 41%. And the life of mine free cash flow increases to a staggering $19.5 billion. And you can see there the payback period is the same as a mining, just producing a spodumene concentrate. So the numbers are show-stopping, and it's something we're keen to explore. Obviously, it's a bigger bite for Liontown, a capex of $1.1 billion to set this up. That does include the $325 million to produce concentrate. We're not kidding ourselves that we have the expertise to produce a downstream product at Kathleen Valley. But what this study does show is the upside potential at Kathleen Valley, and hopefully what it will do also attract a partner with the deep pockets and the expertise, the chemical expertise, to help us produce lithium hydroxide on site. This just shows that pictorially the margins and going downstream, so you can see there lithium hydroxide produces 4 times the cash flow of just producing a spodumene concentrate. So as I said before, it's an overused word, but it is a compelling economic case for us to consider downstream processing at Kathleen Valley and to seek a partner to help us do that. Another reason it makes a lot of sense to consider downstream processing at Kathleen Valley is just the location and the available infrastructure. We're just off a sealed highway that goes all the way into the port of Geraldton and Esperance and Kalgoorlie, wherever you like to go. There's a power line to the west. Importantly, there's a natural gas pipeline just to the east. If you're going to do downstream processing, you need gas, and there's plenty of gas there. We're near the town of Leinster. There's sealed airstrips, etc., etc. The other advantage we have at Kathleen Valley is we have plenty of space. So if we do downstream processing on site, it means we actually have somewhere to store our tailings. It's my understanding that the lithium hydroxide plants at Kemerton and Kwinana that are being built will actually have to truck their tailings away because there's nowhere to put them in the outer suburbs of those places. So heaps of space at Kathleen Valley. So if we go downstream processing, we have plenty of room to store the tailings. Everyone's aware of the current situation for lithium. We're not kidding ourselves, the price ain't great at the moment. But sentiment is undoubtedly turning at the moment. The consensus is the long-term fundamentals remain very strong. The timeline at Kathleen Valley is such that we look to be in production as the forecast rise in lithium demand occurs. And it's being driven largely by government mandates out of places like Europe and China, and now hopefully America with the change of president there. And it's all about reducing emissions. One way to reduce emissions, or a good way to reduce emissions, is to incentivise people to drive electric vehicles. Electric vehicles need batteries. Batteries need lithium. Battery chemistry may change. The ratio of nickel, copper, manganese, cobalt, you name it, may change, but they all need about 10 to 20% lithium. So going ahead at Kathleen Valley, we've completed the PFS and the downstream scoping study. We're currently working on a DFS, which we'll have out by this time next year. Then we'll follow the normal course of events for these projects with the intention of being in production by the first half of 2025. This is a conservative time frame. If the situation changes and it looks like we should be into production earlier, we can actually telescope this time frame and actually be in production earlier if we so desire. Okay, so Kathleen Valley provides Liontown and its shareholders a very strong underlying fundamental value base. Mora, on the other hand, provides the company and its investors with a bit of sex appeal. So it's located, Paul mentioned, it's in the same area as Chalice's Julimar discovery. Julimar is about 90 kilometres to the south of our Mora project. We acquired our land position back in 2018 and 2019 as part of a just regional generative strategy that most exploration companies follow. One of the reasons we went there is that of all companies, Poseidon back in 1968 actually recorded some very anomalous nickel numbers from the central part of the project area. Then they decided to go off to Eastern Goldfields and kick off the nickel boom, and they never came back. Saying that most of the project area has never been explored. It's amazing that there's been very little work done in this area. Again, we own 100% of the project, and it's located an hour and a half drive from Perth. We have a number of target areas at Mora. The most advanced is what we refer to as the Mount Yule Felton corridor. Here we have a 15 kilometre long, 2.5 kilometre wide zone with multiple coincident geochemical and geophysical anomalies. One of the main exploration techniques we've used is auger geochemistry, that is taking samples from 20 centimetres to 80 centimetres below the surface, and the numbers that we've been getting have been show-stopping. So we're almost getting ore-grade gold values at surface at Mora, up to 0.92 grams per tonne gold, associated with very anomalous PGEs, nickel and copper, and this is not a one-off. There are multiple high-order geochemical anomalies. An EM survey that we flew in August also defined a number of multiple late-time responses which indicate that we probably have sulphide-related mineralisation in the bedrock beneath some of these geochemical targets. So the project has the same sort of smell as Julimar, the same sort of elemental suite, albeit we may have a much stronger gold flavour at Mora. Just zooming in on the trend, this is the Mount Yule prospect. It's located at the northern end of the trend. This is a 3.6 kilometres east-west, 2.2 kilometres north-south, so it's a massive, massive anomaly. Multiple high-order gold numbers within this anomaly associated with those other elements I've mentioned before. It's coincident with a very strong magnetic high and also a very strong gravity feature, which is telling us that the underlying bedrock is probably a mafic, ultramafic intrusion, which is the same host rock or the same rock that hosts the Julimar discovery that Chalice has to the south. So going forward at Mora, we want to get out there. The crops have got to come off. Hopefully that'll happen this month. Get out there, do some ground EM just to tighten up some of the airborne targets that we defined in August. Then we want to get out there. We've got an air core rig booked for next month, and that'll be followed up with a RC drilling program. There hasn't been any drilling done within QE of any of these targets. We also want to extend our first pass coverage across to other parts of the project area. Currently only 30% of the project has seen any exploration, and there are a number of very interesting targets which we're keen to get on the ground and assess with shallow auger drilling and other techniques. Okay, so why Liontown? Well, at Kathleen Valley we have a world-class resource that will support a very long mine life. We're focusing on mining high grades, which will help us keep the costs under control. We're in a very good mining jurisdiction and we're close to very good infrastructure. And as part of the DFS, we'll be considering a number of opportunities to improve on the financial metrics of the project. At Mora, we're in an extremely exciting mineral province, and people need to remember this has only come to fore in March this year, so it seems quite amazing. Our early exploration results have far exceeded our expectations, and we're looking very much forward to getting on the ground there and doing the maiden drilling program. So just to conclude, a very experienced board, including the great man Tim Goyder himself, good range of technical, financial and corporate skills on the board, backed up by a very experienced management team. So we have all the expertise we need to advance both Kathleen Valley and Mora. And importantly, we've recently completed a $12.5 million capital raising, which was well oversubscribed. So we have the money in the bank to actually complete the DFS and continue well beyond that into 2022. That's it. Thank you very much.
Thanks, Dave. One question, and from a shareholder, and I'm going to add to it. The Mount Yule project at Mora.
Yeah.
So that's the extension, to be clear here, that's the extension of the Julimar rocks, in effect, albeit to the north. Is that right?
I wouldn't call it the extension. The Julimar mineralisation is hosted by an ultramafic intrusion. So basically these intrusions have popped up into the geology in that area, and we have another intrusion. It's not the same intrusion. It's a similar type of intrusion. And that whole region, for some reasons, just seems to be very anomalous in platinum group elements in particular. Because remember, between Julimar and where we are at Mora, you've got Yarrawinda, which also has a lot of PGE. So it just seems to be, there seems to be a whole series of very fertile mafic, ultramafic intrusions within the region, which have yet to be really fully assessed from an exploration point of view.
And the targets you refer to have been identified through geophysics?
Initially through geophysics. And then we've come in and done geochemistry to confirm that these, not only are they geophysical anomalies, they're also...
But they appear to have more of a gold bent than a...
so far, yeah, we're seeing a lot more gold. I'm not, despite the fact I've gone across the passageway from Chalice, I don't get to see a lot of their data, but I haven't seen a lot of geochemical maps showing gold. They have got some gold mineralisation at Julimar. They've released those results, so they do have gold at Julimar. but it's a system down there which seems to be very much dominated by PGEs and nickel.
And when exactly are you going to stick some holes into these targets?
Listen, we're hoping to do it in December. The crops are coming off as well. They were coming off, and then it's decided to rain in Western Australia, which will hold the farmers up a bit. But as soon as the crops come off, we'll be on the ground and drilling.
Right.
That's the plan.
Thanks very much, Dave.
Okay, thanks, Paul. Cheers.